wherever you are. Today we are going to look at this new series I'm going to start today, and I titled the series "How to Trade Profitably Without Fear and Slow Trial and Error." Because what I hello Adam, because what I actually noted. So some people are coming in here. Hello Adam, Abdul, Evans. So let's wait a couple of minutes here. In the meantime, I'll just introduce the new trader workshop that I'm going to offer here on Premium FX Street. It's going to be two webinars. So in this webinar, I'm going to cover the steps and secrets to identify market direction, trade with a consistent process, and have a good average monthly. In my trading room recently, we are experiencing very good results, 2 digits per month and sometimes per week. So now this is for anyone who's interested in trading forex, but the concept that I'm going to talk about, they apply to stocks, futures, or and typically these are the people I work with: doctors, engineers, consultants, people in IT. But this is good for people who are retired or semi-retired people who actually want to want to develop lifelong skills in trading. And more people come to me saying, I have a good job, but of course we always need money, and people that have kids, and what's the cost of education these days. And some people also come to me and say, I want to spend my time. I was very active, now I'm retired. I want to spend my time and doing something that is challenging intellectually, and I could also do some profit. So most importantly, if you want to be successful in trading, you have to be hardworking. There's no way around it. And I see that the majority of people who succeed, actually the totality of people who succeed in trading, they really have that drive, and they're not afraid of putting some work in. Of course, this can be interesting for people who have a special interest in the markets, find it challenging or interesting, and who want to build lifelong trading skills. Okay, hope this is cool with you. Hello, thanks for joining in. And if you have any questions, you can interrupt me. So we're going to cover half of this presentation today, and then another half is going to be scheduled during this month. Okay, now as usual, you can stop me. We'll cover half of this, and then we'll cover the other half. Okay. All right. So what we're gonna do in the next 15 minutes is trying to capture the major issues people have when it comes to successful trading, and I'll give you 7 steps to manage some of the problems. And I will also give you a lot of trading breakthroughs. Okay, if you're still stuck in some of the problems or understanding of what you have to do, I'm going to give you those breakthroughs to you. Okay, so in the next 15 minutes, we're going to look at how to consistently pull consistent gains from your trading business. For me, business is a trade. Trading is a business. Sorry, and now these numbers might seem ridiculous to you, but right now, these numbers are absolutely possible. And if you wanna join my trading room, I'm giving access for 1 month free to FX Street. Subscribers as well. So I'm going to give you the exact strategy that you can use to generate 4 or 5 figures per month and beyond. Of course, trading is a business. So obviously, if you start with a 5K account, you're not going to benefit from as much as you would consider this a real business and actually keep adding to your account. Okay, so I see Evans, Gregor, welcome, Gregor as well. We just started, so you have not lost anything. We are just saying what we're going to cover in the next 15 minutes. This is a two sessions workshop, and the objective is to show you and give you a few trading breakthroughs. Okay, so we'll also look at how to set up a powerful trading process that will feed low risk trading opportunities, and also learn how adding can boost profitability. In fact, I don't know if we'll do this today or next, or in the second part, but I'm going to show you a recent trade and how we added to that trade. Okay, so we'll also look at how to apply advanced risk and money management so that your capital is protected, and that's very, very important. I have my own definition of trading. Now, when you protect your capital, also your confidence is improved. So if you have developed negative beliefs in the last few years, and you went through losses, and everybody did. I mean, I did myself when I started. Then advanced risk management can be used. For example, risk-free trading. Money management, on the other way, help you boost profits. Okay, so there are two equations in trading. The first one is protecting your capital, and that's trader's job number one, as we're going to see later on. Okay, so David is also coming in. So on one side, the first thing you have to do is protect your capital. When you have done that, there are ways to boost your profits, and that's called advanced money management. There are different techniques there. So we'll also look at how to stop using traditional decking analysis. Now you might say, well, Giuseppe, what are you saying? I mean, how can we successfully trade the market without decking analysis? Well, I'm not talking about all of it, of course, but here there has to be a big mental shift that you have to do. You have to start focusing, moving from using indicators that are only statistical, only diagram of statistical outcomes from history, from data history, price data history, and have no relation with who is actually moving the market. So we're going to talk about that a little bit later on. But the main idea is that you have to start understanding price structure and who moves price and how, and you need to be able to identify where these entities, where these big funds, algorithms, professional money is, rather than trying to just identifying a low risk opportunity with indicators and other instruments. So and the most important thing, there's a lot of distraction going around. You have to do your own trading without the need of confirmation from experts, reading news, getting trading ideas from Twitter, YouTube, Facebook groups. You have to learn to look at price and become independent. Okay, you have to develop your personal views on what price is doing. That's paramount. Now, my promise to you is this one. I would give you a step-by-step strategy and 3 trading secrets that are going to change the way you look at trading, believe it or not. So stick with me, and you'll tell me in the end whether I maintain this promise or not. Now, this is not a get rich quick or make money scheme. Trading is not that. If you want to make quick cash, trading is not the way, because trading is a business, and It's not a push button riches. People who want to trade with automated systems, robots, soon discover that there's no holy grail and you have to put hard work into this, okay? And this is not a way to be a fake trading expert and trick or deceive yourself in any way, because in the end it requires time, it requires years to actually I was reading an article from Jake Bernstein, and you know, he has 44 years experience, and he was saying, well, you know, it took to me 20 years to discover the things I use today, and 5 more years to learn to use them, which is, you know, which is unbelievable. And probably, you know, he has built on the shoulder of other giants. We all do. I build on the shoulders of my mentors as well. And imagine if we didn't have those mentors, right? I think there are some of the people that I work with here, and Abdul, so they know what I'm talking about. So, does this sound familiar to you? This is statistics from Rwanda. People, you know, you have lost between 3,000 to 6,000 in a period of 3 or 6 months. Some people are very smart. They just start trading, and they just start paper trading. They understand there are difficulties and they get help. And you start out every month filled with uncertainty about where the next trading opportunity is coming from. You know, in the past, for me, it was like that. I really could not. I really was not able to understand price structure and decide where and which markets to look at. You don't have a strategy or confidence in one, or you don't know where to put your stops, how to size your position, and where to take profits. And you know, you might be still using one of the multiple indicators here, as I MACD, stochastic, Bollinger Band, Keltner channels, MAs, and many others, and are confused, or you cannot get consistent results. And there are also other aspects of successful trading, and that's the psychology of trading. A lot of people do not focus on that, and they don't even understand that that's important. And to be honest with you, when I started, I read a lot of these recommendations on books, but really, when I read them, I said, okay, well, what does it mean to me, and what does it mean to my trading? That I need to manage my psychology. Well, what really does that mean, right? And only when you do it yourself and you work with mentors, you really understand how you can actually put in place the right mental psychology, the right mental environment that is conducting successful trading. And you can avoid big mistakes, like typical mistakes are 5% mistake, right? Whereas you actually put on your position that you don't respect your stops, and your position becomes an investment, and you change your mind, you keep losing, and then eventually you know, you lose money because you exit the market. Or maybe you're uncertain about market direction and don't have a step-by-step procedure to analyze the market and understand what the major players are doing and how they are positioned. This is essential in the way I do things, but I believe that regardless of whether you do things the way I do or any other way, this is important. It's not about, again, it's not about using indicators to identify the next good trading opportunity. It is about understanding what is the structure in the market, what the large players are doing, okay? So, and maybe you don't know how to identify low risk opportunities as well, and then create a trading plan and using a timing technique that will identify for you potential setups. And actually, sorry, the setup is of course identified by analyzing price and identifying the low risk opportunities. The timing is the entry trigger that needs to confirm that opportunity as well. Abdul is saying, I have a question adding more to trades. I'll ask later. Very well. So we'll get on that. Okay. So another problem that I see with traders is they go through boom and bust cycles. They have a sequence of win, they get excited, maybe they also made some changes. They never take money out from the market, and actually that's one of the principles of consistency in trading. That, if I remember well, says, I pay myself as the market makes more money available to me. And this is something that you can read on on the books from Mark Douglas, Time in the Zone. It's very, very important you integrate those fundamental truths and principles in your trading, okay? And this will help also avoid these bust and boom and bust cycles. So you don't know how to manage risk and protect your gains and add existing position to boost your winners. Abdul, we're going to look into that. You don't understand what is sabotaging you from a psychological viewpoint and don't know how to work with discipline and psychology. And the things that sabotage us are simply the negatively charged trading belief that we develop even without knowing as we go through our trading practice as a space. Okay, so what's the real problem? Well, you have not made the mental shifts yet, sorry. And now that's the reason why I'm gonna give you 7 steps that you have to go through. And if you have not done that, take the time, watch this presentation again, work out at one step at a time, and this is the strategy I'm going to give you. And I will also give you, some trading secrets that you have to apply in your trading. Okay, not only you can. Now, once you apply this 7-step strategy, you look at the markets differently or start thinking about that. You'll understand what you need to know to be able to identify low-risk setups much easier, to time and trade them. And confidence here is a key point, because you may have lost confidence. Some people have because of the trading, and knowing what the big guys are behind those trades as well. And that's very, very important, because in the end, to get a move in the market, you need participation, right? From people who can actually move the market. Me and you, we cannot move the market. And some techniques also capture the market psychology. And the way I define market psychology is the aggregated behavior of a group of traders actually taking as a group of traders taking as a group. And we will talk about that as well. You may also have fear, anxiety, or stress of wondering where the next trade setup might come from. That will be gone, because if you understand that there is a structure in price, and you're able to identify that structure, then you should be able to actually trade with the trend or in the direction of the least path of resistance. Okay, so you have a step-by-step process to serve you high probability setups on a silver platter. I'm gonna jump on this just in case you don't know me. I'm a leading authority on modeling algorithms, smart money in retail trading of modern high volume markets. Currently, I'm also studying dump money. Because dump money is not always wrong. Sometimes it's right, and when it's right, you want to be with the crowd as well. Okay, so that's very, very important. Imagine, for example, when the market goes down. I have also Abram joining in here. Welcome. So for the past 5 years, I've been helping clients implementing a step-by-step process to model price and trends, identify and successfully trade low-risk probability setups. I worked behind the scenes of some of the most active technical analysis societies, the Italian SIAT and the Canadian CSTA, Canadian Society of Technical Analysts, which are both members of IFTA, and have researched advanced trading techniques and published several original research paper. Last year, I was presented the prestigious Jack Frost Award 2017. Jack Frost is one of the person who's behind the development of the Elliott wave, by the way. And in 2016, the same award was presented to Martin Pring. My own trading companies has more than 2,500 people at the moment, and happy customers as well. And I specialize in swing trading of forex futures and stocks with intraday timing, with proprietary techniques. And particularly, I have a timing technique that I call Fibs Talk. Now, let me tell you a little bit about the puzzles and how I came to where I am now. So I've started in 2001, and the beginning for me, the market was really a puzzle, as you see here, and I wanted to solve it myself. So I used to work for Accenture, actually almost 10 years, and traveled a lot abroad in Europe. Currently, I live in Canada. In the evening, I would eat with my colleagues in cities like London, Bristol, Dublin, Athens, Warsaw, Prague, Munich, well, Rome, because I'm from Italy. And then what I would do, I would excuse myself and go back to the hotel and say, guys, I need to study the market. So I started really early in 2000s. I averaged for a period of time 20 hours a week on top of an already very demanding schedule. When you are a consultant, you work really a lot. I mean, I used to work 10, 12 hours a day. So would you say that I'm a hard-working individual? I mean, I would say I am, but yet 5 years of hard working, while working on a full-time job, have not helped me becoming a consistent trader, and that's was now already 2006, and that's when I decided to start working with mentors. So I had many mentors. I mean, it was not easy for me to find good mentors. Okay, and I worked with Van Tarp, Ivica Jurasic, David Asley, Bernstein, and Di Napoli, just to name a few. So, and I took many courses and program and tested an innumerable number of services, methodologies, techniques, but only really a handful of mentors were able to make a dent and make a difference for me. Okay, so really working one-to-one with mentors has helped me, and 2 or 3 years later, things started clicking, and I continued my own research and find more information. So that's how I came with all this. Now I got to observe and model successful and less successful traders. Some approaches were not viable to me. They were too short term. Working on intraday charts, that's not really my style. I mean, I'm not able to do that. Some people are, want to do that. But I also believe that the money is not in the small term, small time frame. Actually, the money is in the larger time frame. Okay, that's where really where the money is, and so that's the kind of trading that I do. I see other people coming in, Carlos as well. Now. At some point, the light bulb moment for me when I realized that to get on average results, I had to do things differently, which included, to me, unlearning most of the technical analysis techniques that I had learned, believe it or not, and things really started working well. So, to me, this is what I came out with when I realized. When I made together all this realization, you don't need indicators, but you need to learn to read price, really how price moves. Okay, and there are different techniques to do that, and I'll show you some of the techniques I use. There are two major group of players that control a market's price on different time frames, at least two. And this is what I call the smart money, which is really professional traders and algorithms, and the dumb money, which is the crowd that uses traditional technical analysis. Okay, now the psychology is much more important than the trading system or method. The method, believe it or not, it's learnable. It's a skill, like risk management, like money management. They're just methods, methodologies. You can learn them. What you cannot learn if you don't work on it, it's working with your mental environment, the psychology of your trading. Okay. So working with our mentors helps developing the right mental framework for success. That's what happened to me. And the secrets to large profits is to work on the larger time frame and to add two trends, and that you can do that in all time frames. So if you have a daily trend, you can add on the 4-hour time frame and hourly. If you have a weekly trend, you can add on the daily 4-hour. But most importantly, trader's job number one is protecting your profits. Okay, large profits are generated in other ways, and I mentioned already before that the way you generate large profits is having a system that has consistency, has a positive expectancy, and then you can once you have managed risk, you can use money management to increase those profits. All right, so these are the 7 steps I'm going to give you. The first one, you have to understand trading, understand the markets, and understand risk. Let me put you a question. How many people risk only a percentage of their account? And how many people of you use fixed lot in your trading? Please answer the question in the chat here. Okay, so this is step one. Now, what is trading? Trading is really about what you know, but is also not only about what you know, but also is about who you are as well, believe it or not, because you can have the best method, the best techniques, but then you are not able to execute them. Okay, so it's about what you know, and it's about who you are. It's a journey. I call it from Hell Island to paradise now, and you need to follow a process. So you will need to change a number of things. You need to change your beliefs, your trading beliefs, and what works and is appropriate to have in your mind to be successful in trading. You need to change behaviors on what you do, on what you must do, and you need to change your routines. Okay, you might need to change the way you behave and establish more discipline as well. Okay, so for me, trading, it's really, it's really, this is the way I see trading. This is a business. I don't treat it as a job. I really treat it as a business. I do not expect a fixed income from trading as a salary. Don't expect that. You can be hit by a windfall of profits in few hours, a few days sometimes. And sometimes you have to wait because trading is about sitting on your hand. It's not about getting action. Okay, trading is about thinking and waiting the best time to get in. It's not about trying to trade on the 5 minutes and take all the possible trades. If you have that idea of trading in your mind, you might want to review that idea. Trading is a business. It's not exciting. But it's actually boring. But I like that kind of boredom. Okay, so you can never force returns in trading, but remember that they are proportionally related to the time you spend or work you put into it. Yes, returns are a variable. You can be hit with a windfall of profits, but they always reflect some kind of work you put into it, whether you have learned the technique, whether you have made the analysis. And some work is required because, and if you do that, trading can really hit you sometimes with a windfall of profits very quickly. You don't even know where they're coming from. But you can make several two-digit percentage of your account in a few hours or few days. Now, when I think about trading, I think about the 7 pillars that you need to master. And I have this picture here. This is something I've created some time ago now. You might have seen this on FX Street as well. That's the way I see trading, and it's a very simple model that helps you actually visualize what you have to focus on. Now, the problem in trading for in retail is this one. It's really this one, that many people only focus on this little part of trading. Okay, and you might not want to accept this picture, and that's up to you. It's your own risk, but I'm telling you, this is trading. Okay, and a lot of people only focus on this small component here. They know very little about risk management, very little about money management, and they actually only focus on the method. The reality is that there's a wall behind it. And as you can see here, near the method, we also have psychology of the market. Your method, and it's not a case it's near the methodology, your method needs to reflect also the psychology of the market. It means that whenever your method gives you a setup, that has to reflect the fact that the psychology of group of traders is against or aligned with that setup as well. Okay, so this is a piece that nobody ever considered. But I don't want to, I actually presented the 7 pillars of trading in one of the webinars on FX Street, so you can go and watch that. Please do. I think it's very important, and it's going to change the way you look at trading. The most important thing that I want to show you in this diagram is that there is one element here, one of the seven elements that actually keeps this wheel all together, and that's trading as a business. If you don't consider trading as business, eventually, you're not going to be successful. Okay, and the reason is This is not a passion. This is not a pastime. This is a serious activity that you have to consider seriously. Okay, so what are markets? Markets. It's really it's a sequence, a never-ending sequence of prices. Many people approach the markets never trying to understand what really they're getting into. And I like what Alexander Elder has written in the past. Any clown can press a button and put on a trade. And that's true. I was a clown. I was that clown in the past. And the point is that market have so very few constraints that you can actually ruin yourself very, very quickly. And as the rules are not given, really the only rules is the asymmetry of information and conflict of interest. That's the only rule. So you need to adopt ways to protect yourself, right? And how do we do that? And how do we do that? Well, for these reasons, you need to smarten up and understand that markets are complex and there are truths and principles that apply. I would absolutely recommend reading, if you have not done that yet, Mark Douglas, Trading in the Zone. Write it down on the chat how many people have already read that book. That book is central and actually presents the 5 fundamental truths of trading and the 7 principles of consistency that you have absolutely to integrate in your trading methodology. Whatever that is, you have to integrate that in the methodology. Okay, you need to understand such principle and truths and make sure they are reflected in your trading. So I'm writing it down for you in the chat. Trading in the Zone, great book that you absolutely have to read. Okay. If you have not done that, please do and try to understand how to integrate those things that he talks about. But I have here, the 5 fundamental truths, things like anything can happen in the market. Every moment in the market is unique and so on. I'm not going to get into them. I think I have one webinar in the premium FX Suite where I actually explain what those means for your trading. Okay, most importantly, the 7 principles of consistency. Objectively identify my edge. I will define the risk of every trade. One mistake that new traders do, they don't do this. They don't pay themselves as the market makes money available to them, and there are multiple reasons to do that. You should always take 50% of your gains out of the market every month. And the objection I get from young traders or starting traders is, well, no, but why we do that? I mean, I want to leave that in the account, so my account is going to grow more quickly. See, they're only looking at gains and never look at the risk in the market. Trading the market is risky. Anything can happen. Think of what happened at the beginning of 2015 with the Swiss franc. Think at the flash crash. Think at PG Best that failed, the program that failed in the past. Think of any black swan that the market may throw at us. So you need to have that money out of the market so that you're still in the game if anything negative happens. Okay, and I don't want to be negative here. I'm just considering this as a business, and a business, many things can happen. Okay, so risk management. What is risk? Risk management is the most important aspect of trading. Okay, in fact, managing risk is actually trader's job number 1. Absolutely. Can you see the difference here? Can you see? And you have to do this mind shift. You have to go from thinking about gains to thinking about risk. And actually, do you know what happens? Is that once you have managed the risk in your trading, gains become a consequence of that. Your job as a trader is only to manage risk. Because if you have a valid method that puts you into low risk, high probability setups, then once you have managed the risk and you're okay with that, the only thing that remains is gain. We don't know what the market is going to do. Principle number 1, anything can happen in the markets. Okay, because anything can happen, you have to manage your risk first. And after you have managed your risk, if that position will go to target, fine. If that position will stop you out, you will get out either at break even or with a very small loss. okay? Because we don't know what's going to happen next. So you should develop the utmost respect for the market and never assume anything in the markets. Price to do this or to do that. And when you're making an assumption of what's going to happen in the market, that's when you're putting yourself in a very bad boat, a very bad situation. Okay, keep initial risk low, generate steady gains, and more importantly, and that's much more important than generating large gains actually. Okay, steady gains, managing risk, keeping risk low, and you will see that when you reach that kind of consistency, now you can start working on your money management. You can start increasing your risk. So what you really lose in gains by managing risk properly, you regain back by applying money management properly. Okay, so take every opportunity to reduce risk. And I use little no advanced techniques like risk-free trading, for example, which I'm going to talk about more later in this workshop. These techniques allow you to trade more comfortably and help with negative beliefs and biases you might have developed about trading. By the way, I didn't mention Happy Valentine. I mean, today is February the 14th, and I've not mentioned that. So I'm going to mention it now, and I'll continue here as well. Okay, so if you're serious about trading, if you see that as a business, if it's not just a passion for you and you really want to make that, source of income, you want to be your main activity when you retire, you want to, change your lifestyle, you have to learn to take every opportunity to risk. Like everything that works, you really need to get what you want. You need to think about the opposite of what you want. If you want to get money, you want to get gains, you need to think first about risk. And this is very, very important, okay? Okay, so the key here is to manage risk properly. You have to trade low risk setup and wait for confirmation. You have to have setups that really reflect what's going on in the market. It's not just an indication that is given by your preferred indicator, and I mentioned a few of them. We have no control on the markets, okay, and every outcome must be identified and accepted before entering. If you have not done that yet, you have to learn to accept risk of trading before you enter. I have a question there. Valentine's Day and Ash Wednesday, Catholics get 2 holidays for the price of 1. That's very good, Carlos. Going back to this, accept risk before taking a trade, and again, as I mentioned before, keep the risk to 1% or less. By the way, this idea of accepting the risk before taking a trade, that's the way big losses happen. Okay, there's one principle of consistency that says, I think it's number 2. It says, I predefine the risk of every trade, okay, and that's number 2. Number 3 says, I completely accept the risk, or I'm willing to let go of the trade. Can you see how the 5%, the 10% are lost? Because people do not accept that initial 1% loss. They don't accept to be wrong, and they actually end up losing much more. Okay, so take every opportunity to reduce risk, and that's something I want to leave you with. So still have some time. So Alinda, you please let me know when we have to stop, because otherwise I'm going to continue, and we're going to go through step 2. We might need a little bit more than just 2 sessions for this workshop. We might spread this in 3 sessions. So let's look at step 2 now, which is mastering a method grounded in market reality. Do you think that an indicator actually describes what's going on under the hoods of the market? Honestly, please, can you answer this question on the chat here? Do you believe that indicators reflect what's going on under the hoods in the market? Can that be possible? Do you believe? What's your beliefs about indicators? Please write them down as I continue here. Price does. Very good. Carlos, I believe Carlos has got it. So let me give you a trading breakthrough, okay? Because this series is not about me telling you things that you might know already. I want to give you a trading breakthrough here, and I want to talk about indicators. So I have some notes here. Now I mentioned those principles before to you, okay? One of the principles that I've mentioned to you is every moment. Sorry, that's a fundamental truth of the market. Every moment in the market is unique, okay? Now, if this is true, and we know that indicators are just a diagram of that only statistically describe what could happen next in the market. Abdul is saying, no, they always lag price. That's exactly correct. But there is one principle, one truth of trading that says every moment in the market is unique. Okay, now if every moment in the market is unique, how can ever an indicator which is derived from price describe what's going to happen next? It will never be able to. And if you read the book of Mark Douglas, I think he has a nice example of gold moving in a range and it's approaching its support level, right? And what happens is that because every moment is unique, and around that time there is a medium-sized gold trader that needs to raise capital, and they sell gold. What happens is that price gets below the support and actually starts triggering stops below that support. Now think of it, if that trader did not do that action exactly at that point or around that time, what would have happened? That gold would have stayed in its range. So it would have stopped at the support and started moving higher towards resistance. Okay. Now this is very important because if we accept the fundamental truth that any moment in the market is unique, then and also the activity of one large trader can change the outcome. How can we reconcile this with the use of indicators? To me, when I realized it, I said, I got it wrong for 6 years, for 7 years, right? So I make no effort to use any kind of indicators in my trading. As if you know my analysis, and if you don't know it, you can come on my website, phipstalkertrading.com, and I will also invite you 1 month in my trading room, so for free. So we cannot reconcile these two things. Smart players are really behind indicators, really? No, they're not. Indicators are only derived by price. We don't know what smart players are doing. And plus, there are things that you already mentioned. Only price reflects what's going to happen. Indicators are like price. And if you think about it, a lot of people, they use indicators, but they never test them. In fact, the average indicator like stochastics, RSI, they may have between 12 to 24 different combinations if you only consider one indicator, okay? And if you consider longer charts, and those combinations don't even consider what's going on in price. Those are only combinations related to the indicator itself. Now, honestly, tell me how many people have ever tested their indicators. They just stick with what the books, the simple rules that they read on the book, and what they say, what the mainstream is saying, okay? On the other hand, and this is my recommendation for you, and you're free to do whatever you want to do, your method, must have a positive expectancy that is going to generate gains in the long term, not like a casinos or gambling games, okay? That's very, very important. You must learn the mechanics of a burst trading method, and this is usually the component people focus the most, as I showed you before in that model, the seven pillars of trading. However, without a good method that reflects how market works and that reflects the psychology of the markets, obviously there cannot be success, right? Now, if you are here and probably you have not likely developed that confidence or discipline in a trading system, so you need to do it to generate consistent results. That's very, very important. The method needs to work together with the timing, together with the risk management, which is paramount, as I showed you before, and the money management, and all these components together must participate and help you develop that confidence. Okay, I'll talk more about how to generate that confidence later in this workshop. So the key to a good method is not reliability, how often you are right, but is expectancy, which is determined on by how significant is the difference in size between your winners and losers. If you don't know the definition of reliability, expectancy, I'm writing that down, expectunity, you should know all these definitions, okay? System, quality, you need to learn all these definitions. So please, sorry, that's quality. So please research them and learn about them, okay? So you also need to learn how to accept losses, which are a fact of life and a fact in trading as well. No method is right 90% of the time. I have some statistics in some of the levels that they use, the Phipps Stalker levels. They actually provide between 85 to 90%. They offer the possibility for a risk-free trade. And that's the only thing that they offer. They don't guarantee that the market will go to targets. But as traders and as business owners, we need to manage risk first. Okay, so no method is right 100% of the time. You need to accept losses. So you need to keep your risk low. And here are some concepts that you can use to evaluate both the trading methodology and your own trading results, okay? And I mentioned some of these concepts: reliability, expectancy, dollar gains in average per dollar risked, how frequency, expectunity, which is really expectancy times frequency. You need to know all these measures, because if you're serious about trading and you're measuring yourself, you're testing, you're paper trading, you're testing your method, you need to calculate all this, okay? Okay, so now sticking to a trading plan here, that's very, very important. A good trading method offers low risk setups and a clear trading plan. So the point here is that executing a trading plan is simple, but it's not easy. And again, Alexander held every clown can put up a trade, right? I really love that quote. And it reminds myself, you know, in the past, I would trade without very good, strong and good reasons. Now, the mechanism of trading, which is entering limit to stop market orders, is not complicated, but yeah, many people cannot stick to a trading plan. And why is that? Of course, it's a confidence problem, right? And Carl is saying, accepting losses and welcome the pain that comes with it. If losses don't hurt, your financial survival is tenuous. Yes, Carlos. What I'm saying here is that you need to accept them in the context of the principles of consistency, which is I completely accept the risk, or I'm willing to let go of the trade. So this acceptance is not after the process, it's before. It's before you take the trade. It's not after you take the trade. Okay, I'm not talking about once you have the loss to accept it. I'm saying because really we don't know what's going to happen next in the market, and really, you know, our edge is just a random distribution, right, between wins and losses. You have to accept that loss, that possibility, that risk, the possibility of a loss before. But I agree with you. After you accepted the loss, if you don't have the resistance for that, then you cannot survive financially. So I totally agree with your statement as well. Does it make sense? So that's what I mean when I say, okay, that's what I mean when I say to accept losses, meaning really to accept risk, okay? The risk that you're taking in that trade. Now, the main problems are lack of confidence and acceptance of risk. Again, that's very, very important. I want to, I want to stress this. Ego. And there are a lot of people that, you know, I encounter sometimes some of these people. They're not coachable. They think they know it all. They don't agree. They know better. Fine. I mean, I'm here to help. I mean, if I cannot if you don't let me help you, then there is no way I can change your experience. And some people are simply like that, and that's okay too. I mean, they have to go through that process as well. Fear is mainly from previous experience and negatively charged beliefs. And we're going to talk about beliefs again going on. So it's 8:55 here. So I'm just going to continue until I'm stopped, and then we're going to wrap up and um, we're going to close. So I'm going to continue till 9, and then I'm going to wrap up, okay? And we will continue, so don't worry. I hope to see you, and we will continue. But let's continue now. For now, so we need to understand the method and how it reflects participants' actions. Only after you understand that, and if you have tested that, you also proven yourself that indeed the method captures what happening under the hoods, and why and how that method reflects the actions of participants in the market, then you can actually start trading with confidence. Okay, so how do we do that? You can do many things. You can lower your risk, you can paper trade, you study past results, you prove the methods to yourself, and you need to give yourself time to tune the method in a way that works for you as well. Remember again what Jack Bernstein said. Said to me, it took me 20 years to research my method and then 5 more years to learn to use it, which is unbelievable, right? I mean, how blessed we are. I mean, we shortened this process of many, many years. So are you aware of these components of a trading plan? There are at least 8. In reality, there are more because your position interacts with one another, and if you have a portfolio, you might have multiple positions. But basically, you have to select the market that you're going to trade, the setup, long or short direction, the entry, and the setup entry are only given by your method. Okay, and then of course stop loss. If you have a re-entry strategy, if you're stopped out, but the idea is still valid, do you re-enter the market? And that comes with confidence as well, because a lot of people, they say, it didn't work, I'm going to stay out. Okay, partial exits, including risk-free trading exit, profit exits, where those levels are in position size. There are more components, but these are the basic components of a trading plan. Okay, entries, there must be a simple level that may be the result of the method or the application or even the timing technique, because sometimes the entry is only known after applying the timing trigger, the timing technique. Okay, for example, that's what happens in my Fibstalking timing. I only know the exact level when the opposing sequence of measured moves, the model algorithms that are trading against the continuation of the trend fail. And that failure is a very specific level. And I've talked about the Fibstalking time a number of times in my webinars. If you want to get a free if you want to get a free course on what I do, you can go to fibstalkertrading.com/free. Okay, go there. You can sign up, and you'll get access to an ebook and a 6 hours video course where I explain all these concepts. So partial exits are also important, or profit exit, and they will usually depend on how different players are positioned in the market. So, of course, the stops. You're very welcome, Carlos. The stops are the stops also depend on that, on the volatility of the current market. For example, I often talk to traders, and they say, I started testing my method. I used a 20 pip stop. I said, well, a 20 pip stop won't make it, because as a fixed stop does not reflect in any way the volatility in the market. Looks at what happened, let's say in the SP 500 in the last 2 weeks, right? The volatility has increased greatly. Maybe 3, 4, 5 times, right? So the 20 pips now should be, or 20 ticks should be 100 ticks. So that's very, very important. And also and also targets must reflect the volatility in the market. So the position size may also change based on the type of opportunity or the setups, whenever large players are behind the move or not, in which case you want to also consider increasing the position. The position does not have to be always 1%. Of course, that's what I recommend to people who are starting. But when you start getting an understanding of price traction and who's behind the moves, then you can start changing your risk as well, okay? All right, so it's 9 a.m. Here. So what I'm gonna do, we will continue with step 3 and the 3 secrets in the coming sessions. And there is still a lot of information I want to give you and breakthroughs I wanna actually give you. So I just want to show here what happens when and how you should really apply I really apply the process. Okay, so when I mentor people, I actually basically do this. I give them a proven method and system and techniques. Okay, and that means to understand advanced risk and money management, to learn to read price, and how smart money and dump money is acting on price, learning a step-by-step timing and analysis process, work on listening and trading psychology, and learn to measure and continuously improve. Now, you can do this with whatever methods. I mean, this is true for anything that you use. Okay, that's what you have to master. And the way I do it when I mentor is that I teach this content here, these techniques and methods, and I work on psychology. That's 80% of trading, and then I let people take action and implement. There'll be confusion, road bumps, and that's where a mentor or coach comes in, and so you can get correction very quickly and start getting consistent results. Okay, so this is the model that I like to use. And mentorship is actually very, very important. So the last thing I want to leave you with, by the way, it's just if you actually like to get some help, this is how I can help. Okay, so if you have a basic understanding of trading and access on a trading account, you're not wishy-washy, you don't have wishful thinking, ego, you must have an open mind, you must be ready to work hard to take your trading to the next level now, then this is what how I can help you. I can actually have a free 45 minutes call with you. Whereas we go through your situation, I'll give you specific breakthroughs and a game plan to reach your objectives in 2018. Okay, so if you are interested, what you can do, you can go on my calendar here, www.fixedtoketraining.com/apply, and apply for your complimentary trading breakthrough strategy session. So we're going to do, look at your trading, what you're doing at the moment. I'm going to give you some corrections. I'm going to give you a strategy, a plan to reach those objectives. This is completely risk-free for you. I mean, we can have a nice chat, can get to know each other, and I can give you something that can actually improve your trading. What's the catch? Time is a factor. So I only have a few appointments. You can go on fixedtoketraining.com/apply. So let me write that down for you here as well. And again, is this Fixed Trading? And when you do that, /apply. When you do that, you can book 45 minutes with me on the calendar, fill out the short application. The only point is that spots are limited, so book a call now if you are interested and serious. And we will continue in the next session here, and we still have a lot to cover. If you found this interesting, it's much more interesting to me, and it should be to you as well than reviewing charts. I also do that, and in fact, one of the sessions, I'll do a live review of the market. But we'll still have a lot of things to cover. Step 3 is master effective timing techniques. Step 4 is adopt a trading process and a system that fits you. I'm going to show you my current process as well. Step 5 is work on trading psychology and personal discipline. Step 6 is continuous improvement. And then we'll have our 3 trading secrets that I'm not going to anticipate to you, but they can really improve your risk management and magnify profits. Okay, so I want to thank you on this Valentine Day for being with me. If you have any questions, now is the time for the Q&A. Any questions so far? If you don't have questions, you can come also on the call again, www.fibstalkertrading.com/apply, and you can bring your questions to me as well. Okay. In any case, I'm going to see you next in the next session. We will continue with our strategy, and I'll give you very detailed information, and then how we the secrets how we add to trades and price structure. Okay, so thank you very much, and I wish you a great day. Again, if you're interested, go to fibstalkertrading.com/apply, and we'll have a 45 minutes breakthrough session. Thank you very much, and have a great day. Bye bye now.